We really enjoy our conversations with economists on this podcast, even though we rail against their persistent inability to forecast the property market. Economics is a social science that looks into the accumulation of wealth, market forces, supply and demand, the impact of government intervention, and ultimately how humans behave in the midst of all this. Economists can help us look deeper and think deeper so that we might better understand the property market without seeking sugar-hit simple solutions to challenges like how to ensure every Australian has a roof over their head. Beyond being quoted in clickbait headlines, how can economists help us improve our society?
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent, co-host of Foxtel's Location Australia, and author of Auction Ready.
And I'm Chris Bates, mortgage broker. Before we get started, I need to let you know that nothing we say on here can be taken as personal advice. We always recommend you engage the services of a professional.
Don't forget that you can access the transcript for this episode on the website, as well as download our free full or forecaster report, Which Experts Can You Trust to Get It Right? theelephantintheroom.com.au.
Today we're talking to economist Dr. Cameron Murray, who describes himself as having a passion for improving society and thinks economics could be much better than it is. He specialises in property markets, environmental economics and corruption. Sounds interesting, and might be considered by the more entrenched market commentators as a bit of a maverick. We're curious to hear how his research informs his views on the market, and confident that we should be able to tackle more than one elephant in the room today. Thank you so much for joining us, Cameron.
Thanks, Veronica and Chris, for having me.
Cameron, so good to have you on. I was recently reading the Falinski Report. I watched your sort of submission, and that was quite humorous, the video, some of the questions and the conversation you had. But, it was some really interesting insights. So thank you so much for coming on. I mean, what was your sort of initial reaction when you read the Falinski Report? And, did anything surprise you, or is there anything they really missed that they missed the opportunity, I guess?
Yeah, look, I think the findings of the report were pretty well entrenched in the terms of reference when it began. It was called the Inquiry into Housing Supply, and we've had many such things. And so, although some of the submissions and hearings touched on, making housing cheaper for residents, a lot of it was just to do with sort of making it easier to be a property developer and making it easier to sort of make money by owning property. So I wasn't super surprised at how narrow the scope ended up being, but it was a good chance to at least touch on, some of the key ideas. And as you said, the hearing I was in with Jason Falinski and the other committee members got a bit heated because I was trying to push the idea that, property is an asset. And we're all pretending that it's like apples, or oranges. And if you have a good rainy season, you get a lot of supply, and all of a sudden you've got to flood the market with that supply, and the price comes down. And we're sort of forgetting that, property, undeveloped land, housing, all of it, it's an asset. It's on people's balance sheets, and it makes a return. And once we sort of shift our thinking to acknowledge that, then maybe we can do something about it. So no, overall, not too surprised. But It was a good chance to get some of that discussion out there in the public.
I think when I was listening to it, I actually thought, this makes so much sense. I hadn't actually thought about it like that before. And it makes sense that, developers control land and they slowly release it to control prices. But, I think that people don't really realize if you were the developer and, if you were trying to make money and stay profitable and hire people, you would do the same. And so Can you explain to our listeners a little bit around why the drip feeding happens and how much that really, it's not the sort of the consumer demand that's slowing things. It's really a bit of both.
It's an interaction in the market, right? So just like when I try and sell out of a share portfolio, I don't dump everything on the market at once, right? I tell my broker to dribble it out and at a certain rate, so I maximize the return I get. Now you've got to think about that problem at a massive scale, right? You've got big, expensive, lumpy housing, and if you've got a large building or a subdivision, you want to maximize the total revenue you get from that project, or the present value of that total revenue, by selling at the right period of time at the right rate. And of course, it makes sense to do that. I'm not, upset that people are running their business in the most profitable way to run their business, But what baffles me is that as academics and thinkers and policy people, we can't just acknowledge this fact about the property market, that your regulations about planning are not going to make every current landowner suddenly panic and change their mind and say, geez, I didn't want to own land. Silly me. I want to sell it to someone and have cash instead. Let's flood the market until prices fall. And, we know what that is, right? That's a property market crash when everyone decides they're owning the wrong asset. And, it was interesting because I think Jason Falinski is a pretty intelligent guy. I mean, he's a politician, so you've got to understand the constraints he operates in. So I'm not going to sort of say he's a fool or anything like that, but he operates with political constraints. And he was reasonable enough to take my advice. And I said, go and ask some property developers to come in here and tell you how much they think prices are going to fall when you rezone their neighbour's land, right? And ask them if it's in their interests to rezone all these other people in their neighbourhoods and increase the amount of competition in the market. Because what they're trying to say is that, please provide us more competition through the planning scheme to make the price of the product we sell lower. Now, either they're the worst lobbyists ever, or they're sort of capitalizing on this myth about how property markets work, and they know that this is not going to happen. And so, Jason Falinski, he brought in some developers and he asked them, if we rezone the whole country for high-rise, is it plausible that prices would fall 20%? And they all said no. They said that's an abnormally high price fall. It's never going to happen. Don't be silly. And so I'm sitting there thinking, well, hang on. The premise of this whole report is that if you do let the market rip, that they will just underbid each other until prices collapse. And, as Peter Tulip submitted, he said, hundreds of thousands of dollars worth of the price of a house in Sydney is due to planning. Well, shouldn't that all evaporate? And why would those people who are in the market say the opposite, right? And so, that was somewhat ignored. That wasn't put in the final report that they said that. And, I've tried to promote that as best I can because I think that's the real evidence. When people in the market, under oath, at a hearing, say, actually, it's not going to really change price, I think we can trust that.
I find that so interesting. And it's also because literally just this week we're recording this, when are we recording this? Towards the end of April. We'll release this in probably May. We, in April, released just Chris and my musings over the Falinski Report after reading it. And it's funny, after I replayed it and I listen to every episode afterwards, it doubles the learning, particularly if we're interviewing someone like you. And I was replaying that and I'm thinking the one obvious thing that leapt out at me was that if 40%, as is often touted, of the price of a brand new property is in the layers of taxation, the various layers of government, if you suddenly drop the prices by 40%, well, then you're going to get flooded with demand by buyers. You're prepared to pay the inflated price anyway. Or so basically then the developer gets to pocket that money as pure profit. So I mean, it's like this whole idea. I mean, it all sounds great in theory, but in practice it's never going to happen, is it?
That's right. Well, we're already paying the maximum, right? Like there's no incentive not to. So you've got an asset that returns whatever it returns, and that's, the market price is what it's worth to the marginal buyer. It doesn't matter it doesn't matter how you change the cost of that asset. So for example, if there were two classes of BHP shares and one class of share had a $100 fee per year to own that share, well, that share would be worth less, right? It'd be worth exactly $100 a year less because it's an asset that comes with an additional liability. And that's the sort of true in property markets. And I guess we know that it's not cost-based, right? We know that this is not what's determining prices, because when you rezone land and the value goes up, the cost doesn't go up for the owner of that rezoned land, but they still charge the market price. They just take it. So it's clearly not based on the cost. And we could reverse that, we could charge them more and they would make less money. And I think, you've got to have a political economy hat on as well here and understand that, if it's true what is said that costs, for example, developer charges for infrastructure. If it's true that they get passed on to the price, why are developers upset? Because they can just put their price up by that much. And often they claim by even more. Some of them say, for every dollar of developer charge, the price goes up $2. I'm like, so you should be lobbying for bigger charges, right? Because you get $1 free for every dollar of charge, right? So clearly it's incident on them. It costs them when they own land, right?
Yeah.
And that's why they lobby against it. But they've got to say what's in their interests is in the interests of society. That's what lobbyists do. I'm not holding it against them. But I think politicians and the academic community has to be a little bit smarter about the motives behind these claims.
I mean, like you said there, marginal buy, really, it's like if you can create more stock, it only matters if that's too much stock, and that then leads to prices to fall because there's not enough demand.
Yeah.
So that's not in the developer's interest. So if I was a developer of greenfield estates, you'd be saying, well, how many lots are available? How many of my competitors releasing over the next few years? How strong is the demand? Actually, you know what? Let's not develop that right now. We've got the chance of that selling at a price that's going to be profitable is pretty low. Let's just land bank it. Let's just leave it, right? And the same thing for apartments. If I can see that Meriton and Mirvac and Greenland are all doing these apartment developments, and I'm going, well, to be honest, there's heaps of 2-beds and 1-beds in the marketplace coming on in the next 3 years. We've got an amazing commercial site that's ready to go with a high rise, but let's just hold that back. And so it sort of always leads back to the market, doesn't it? How much buyers are in the market right now, and that's the only amount of supply that we can create, because otherwise developers would lose money and then they're out of business.
Yeah. I mean, they're not idiots, right? I think we got to remember they're in the business of making money, and that's what we expect them to do. Like, that's sort of their job. Like, let's not pretend that they're in the business of making their product as cheap as possible. They're in the sort of asset trading game. They want to make money. That's fine. But we've got to understand that, for example, new housing in Australia is not like, you don't accidentally build too much of it. It's pretty much build to order. You only build when you get a buyer to show up. And if that buyer doesn't show up, there's an optimal amount of time that you wait before you decrease the price, right? So, it's very demand-led how quickly things happen. And so, for example, I look at the annual reports of publicly listed housing developers, where they're, of course, obliged to be honest to their shareholders about how they supply to the market. And they're very frank about, we have the land banks in capital efficient structures so that we can be patient to time the market and take advantage of future opportunities. And so if you, for example, divide how many new lots they sell by the total stock of lots they own, you get something like, the reverse, the total stock by how many they sell, you get something like, between 12 and 17. So essentially, if you kept selling at this average rate, you've already got 12 to 17 years worth of land on your balance sheet. You don't have to buy any more land. And so the question is, well, why would you hold all that land if owning land is a bad investment and you've got to panic and sell, right? Well, we know, because undeveloped land's an asset. You like it on your balance sheet. It goes up in value with the price of housing. It's a good thing to own. And you can also look at how quickly the industry responds to the market. So I've been looking a little bit at the absorption rate, how quickly the market gets supplied with new dwellings. And you can see in these large master planned estates with over 3,000 dwellings that most of the time when the market's not too hot, they might sell at 4 or 5 dwellings a month. And then, for example, in Victoria in 2016 to 18, 2017, that boom era, they would increase their output by a factor of 8. So instead of 5 a month, they go up to 40 a month. And the question is, well, if you could do 40 a month then, why didn't you do 40 a month the rest of the time? And it's obviously because, you want to maximize the present value of your revenue based on the market conditions, and that's what's optimal. So, that's, I think, the fact that we've got to understand if we're thinking that supply is going to change house prices, home ownership, and all those things we care about, we have to acknowledge that property markets supply in this way. It's very different to, having a good mango season so the price of mangoes go down. Like if every mango was built to order, that wouldn't happen. Yeah.
I mean, I'm massively for developers in terms of, they're playing a role in society. I know on our podcast we've highlighted a lot of issues with new stock and we don't really encourage our clients to go and buy any of new property at all, to be honest.
No.
And, so our listeners here are informed, right? They understand that. But we know that they play a role, and especially developers in the last 2 years have had a really tough time. Lots of developers are going under, employing thousands of people, building costs, etc. But I think it's just being, frank, this is, they're in business, right? And they've just got to make sure that they, are trying to stay sustainable.
Yeah.
And so we just can't assume that they're just going to flood the market and cause prices to fall.
That's exactly right. Can I just mention one other thing? And this comes up a lot in the supply debate. We talk about governments releasing land. And I'm like, I'd go on realestate.com and I can't find any New South Wales government houses for sale, right? They rezone land, they respond to applications, but essentially only landowners can decide whether they're selling or not. And so I feel like this is just another one of those tricks to acknowledge that actually the market has a sort of built-in speed limit on how much it will supply. And for example, developers often complain that, it took me 7 years to get that land rezoned. I'm like, you're telling me you're in the business of building housing and you keep going and buying land that's not zoned for housing and complaining about it. Like, go and buy the zoned land if that's your business. And if your business is getting the zoning changed, well, stop complaining because, everybody wants rules changed in their favour.
That is very true because, of course, we all know that that's the single biggest cause for increasing land value is a rezoning. So therefore they're speculating and, why should their ride be made any easier?
Yeah.
But there's also the other side of this. So that's the sort of supply of new stock. Then you've got supply of existing stock. So you've got, 11 million homeowners or property owners in this country who own properties that have been built, right? Whether it's been built last year or whether it was built 50 years ago or so. So then what you're talking about, supply, it extends to that as well. Like, so when the market goes up, if you're holding a good property in a blue chip area, you don't necessarily feel pressure to put the property on the market when the market falls and you're going to try and maximise your sale price and blah, blah, blah. That's just the way it all works, right?
Yeah.
But it's sort of a bit disingenuous, isn't it? I mean, the government's sort of saying, oh, look, we're really worried about housing affordability, so 100,000, first home buyers every year can pile into the market. When you've got 11 million property owners who don't want their properties to fall in value, so, and vote. So, I mean, that's sort of one half of this. And I know that affordability doesn't just extend to people buying their first home either. I also understand this is about affordable rental. There's a whole there's a lot of issues tied up in this. Which I'd love to get your thoughts on, sort of how that may be solved. And there was something quite interesting that you touched on in your submission that was a response to a question. I think it was a member from Parramatta that asked you some interesting questions. But, is this affordability conversation even legit?
Yeah, that's an interesting, Veronica, you sort of, you've stumbled right into my wheelhouse there of the affordability debate. And I guess, I've got a few responses. Firstly, we don't talk about, petrol affordability or, clothing affordability. We either it's cheap or it's expensive, right? And so I often find when we go down this path of affordability, we're already giving up the logic of the conversation. Let's talk, do we want prices higher, do we want rents higher or lower, etc. So I do find that that's, one thing. And I think the second thing about affordability is separating owning the asset and how much the asset costs and residing in a house. And so you can reside in a house in two ways. You can rent a house from a landlord or you can rent money from a bank and be your own landlord. And what's actually happened recently is renting money from the bank has become much, much cheaper than renting a house from a landlord. And so we actually saw from 2020 until now a massive boom in first home buying. I think it was 180,000 per year the last 3 years and less than 100,000 a year the 5 years before, because renting money became cheaper than renting houses. And so we had that sort of temporary adjustment. We had a very big period of home buying affordability that, it sort of burnt itself out as prices rose, right? As we attracted people in and returned to this, what economists call the equilibrium, where you're indifferent between renting money or renting a house. And so, yeah, it's a really subtle question. What are we trying to achieve with affordability? Because we could just, drop interest rates more and do another little adjustment period, get some more first home buyers in, or do we want rental affordability? And in which case, well, how do you allocate houses if not by price, which is what we do with rents? Like, do we have some kind of rent control? Do we have some kind of public housing alternative, which we did historically, right? So where I get to on this debate is, well, what have we done historically? And, well, to boost home ownership, what you need to do is to get landlords to sell to first home buyers, because all those dwellings have to become owned by non-home buyers. So in the 1950s, we had tight rent controls and credit restrictions on investors, but government supported credit for first home buyers. And so that forced a lot of landlords to sell those terrible assets, rent-controlled assets, to these first home buyers. We had very active public involvement in housing subdivisions and new estates to get those first home buyers in. And we got home ownership up from 52 to 72% in 15 years. So, that's something we could do if we wanted. I think manipulating the asset price of housing, as you said, very tricky. So 65% of households are owners and 18% of households are landlords. The average politician owns 2.3 dwellings, so over $2 million worth of housing. And to think that we're going to sort of somehow change policy to manipulate that asset price with, different tax settings, every 10% off the housing market is $1 trillion off our balance sheets of those people, right? So, yeah, you're right. It's a bit of a conundrum, and that's why we end up with things like first home buyers grants. Suck in some first home buyers, don't decrease the price, win-win, right?
Yeah.
The question is, how long can you do that? Does it just perpetuate intergenerational equity issues within housing? Does it help people who are going to be renting for life anyway? And so on and so forth. So, yeah.
Do you think that the NIMBY mentality or the development planning controls in the more premium lifestyle suburbs of our capital cities that, they're more relaxed in, region, in the fringes and the greenfields and the high density sort of pockets, etc. But do you think this NIMBY factor does, create issues with affordability for, or do you think it's just...
Not really. No, I mean, look, I'm torn when it comes to the NIMBYs, right? I think people should have the security and investment in their neighborhoods, right? So, and I think people should have some kind of democratic input. And so I guess my view is more that, the planning system needs to have sort of a more democratic response rather than a whoever's got the most time to attend meetings and write letters type sort of interaction with the community. Because I think most people are quite reasonable at the end of the day. I'm in Brisbane in West End, and since I moved here 15 years ago, the population's quadrupled, right? It's totally different. And I can tell you the main thing that upsets people is crappy-looking buildings with no effort to do anything on the street. The council's lagging with, the infrastructure. They basically say, we're going to have an extra 10,000 people living here, and, we're going to do nothing, basically. One extra bus stop or something. You're like, well, hang on a minute. Come on. These guys have paid. Well, the other interesting thing is these guys have paid their infrastructure charges to fund this. And so, look, I think there are definitely better ways to go about it, but I don't see it having broad effects on the level of prices or the level of rents. So, yeah, it might make some pockets relatively more attractive. So you can imagine there's a rental gradient. So some places get a little bit higher, others get a little bit lower relative to each other. But that whole curve, how high that is vertically compared to incomes, I don't think is really affected by this. There are just so many frontiers across our cities where there's plenty of potential for development that I don't see it being a major issue.
Australia has got a very high percentage of home ownership compared to other countries in the world, even though it's been declining. Why is that?
Why is that? Well, we sort of engineered it, basically. It wasn't always the case. In the 1800s, estimates put home ownership below 40%, nearly all the way up until the end of the Great Depression and the Second World War. So it's really a post-World War II phenomenon, high home ownership in Australia. And we engineered it. We had very heavy-handed government involvement. We had a huge public housing investment over 20 years. 15% of new dwellings for 2 decades were public housing. And then we gave them to tenants at a discounted price for the next 20 years. So we essentially privatized them and in the process boosted home ownership. So that's the type of thing that gets high home ownership everywhere. And yes, the problem long-term that we're facing now is that political one. I think if home ownership was 40%, we'd have a very different political debate about what we do about housing, how interventionist should we be, and so on and so forth. But because we're at the other end there, at the 65 and previously 70%, there's just too many votes on the line to sort of put people's biggest asset at risk and the value, even if, it's somewhat indirect, that it's a very clear political threat. And we saw what happened when Labor took to the previous election, just a few tax tweaks for investment property that clearly was not politically favourable.
It's interesting. I was going to ask you about some of those sort of taxes and stamp duty, etc. I mean, do you think that they're part of the solution? To potentially, if we want to increase, let's say around affordability. If we want to increase home ownership or make it more affordable for first home buyers, maybe we should be doing things like increasing CGT and increasing getting rid of negative gearing. But then that makes it less affordable for renters, I guess, because you're going to encourage less investors in the market and less rental supply, I guess. And if we're not if investors aren't buying more, then you're going to have less supply and more demand with migration, etc. So it's always balancing, isn't it? It's which ones, if it's actually going to get the right result.
Yeah, that's a good point. That you tighten up investors. Investors buy most of the new police department stock, right? Yeah. And if we've got a build to order type thing, right, you want sort of wealthy people buying them for their tax breaks, essentially, right? Their big depreciation schedules. So that's all fine and well. What you can do is, I guess, have differential stamp duties for first-home buyers, etc., to give them some advantage in the market against other buyers, so on and so forth. You can do all that. There may be small differences. For example, I think in Singapore recently they've increased stamp duty. So for your first home it's 0, for your second home it's like 12%, for your third home it's 20%, and so on and so forth to really sort of create that effect of giving that first-time buyer a big advantage. So, yeah, I mean, you can do all that. These are relatively minor tweaks. I think, I find it puzzling, as you said, Chris, that, we need the investors to buy the new dwellings to keep the stock expanding. I find it puzzling that almost any other major capital investment that we think is good for society, if we want it built, we just build it. Like, we don't go, if we could only just give submarine builders a discount on their tax, we'll get some submarines. I'm like, well, how about you just build it, right? And give it to the Navy and off they go. If only we built this road. Well, how about you just go and acquire the land and build the road, right? So I find it puzzling that the governments are almost the only organisation in Australia that think they can't make money building houses. So they did it, as you said, though, they did it after World War II, and potentially that's one of the reasons that what everyone hates are baby boomers, because they benefited largely from that, But so it's been done in this country. It's been done. It's still been done. What's the resistance? Yeah. So, look, I mean, I'll tell you, I had a conversation with Doug Cameron, former Labor MP, federal, very nice guy, very lefty. And I said, look, you're worried about housing. Why don't you go and build some houses and give them to the people who don't have houses at a cheap price, just like we would any type of sort of welfare system. And he just basically said, governments don't do that anymore. It's just we've all convinced ourselves that we've changed our mind. I'm like, well, that's a bit weird, right? Like, you're tying your hands behind your back before you hit the starting line. Why would you choose that? I don't think people are going to get upset if the government came around and built houses for people and gave them to them cheap. I mean, quite clearly, everyone who gets a house is going to be happy. All their friends and family might be happy and tell their friends and family. So I find it, kind of puzzling how much we're willing to, for example, subsidise rents in the private market, but not build public housing. Like, for example, the New South Wales Land and Housing Corporation, the New South Wales, owner of the public housing stock, it's been selling off dwellings for the last decade, but the value of its balance sheet went from 32 billion in 2014 to 54 billion in 2020, even though it's got 1,200 fewer public housing dwellings, and they've all degraded and so on and so forth. So, they're out there just $20 billion in 8 years just from sitting on this asset and pretending that they don't have any money. It's too difficult to build houses, and it's costing us a fortune. Whereas any other private developer would be like, this is great. This is, I'm going to leverage up into more of this stuff and enhance my balance sheet, right? And increase the value of my organisation.
If you like what you're hearing here, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars, please. Every review helps make it easier for other people to find us and hear what our amazing guests have to say. We love hearing your questions, and we're planning more listener Q&A episodes. Please send your questions in. You can send them via the website, which is theelephantintheroom.com.au, or directly via email to questions@theelephantintheroom.com.au.
So, I mean, this model, is this the Singapore model that, from my understanding, that they help first home buyers? And I understand it through reading one of your articles, but is that sort of the model which you suggest we potentially should be looking at, where we basically give first home buyers a cheap home and allow them to get access to the market, and we try to build as many as we can, really, over the next 1, 2, 3, 4 decades, but you can only get one, I guess.
Yeah. So, I mean, the Singapore model is a very specific way of providing public housing. Essentially, and it is the model that I now propose as what should we do, because of those political constraints you talked about, Veronica, that, anything we do that's obviously going to directly crash property values is a political no-go. But there's a stigma also into public housing and public housing tenants and dependency and so on. But what if we had public home ownership, not just private and public rental, but a public home ownership alternative? That's what Singapore does. So if you don't own property and you're a citizen or permanent resident, once you hit 21, you can apply as a couple to the Housing Development Board in Singapore, and they will essentially sell you a new apartment at construction cost, or less, or in fact much less. So the current price range, so a Singaporean dollar, Aussie dollar, is pretty much 1 for 1. It's between $90,000 and $300,000 for a brand new apartment. So 90 is more like a sort of 1-bedder, and a 300,000 is more like a 3-bedder. They will also lend you money at the cash rate plus 1.5%. So currently that's, less than 2%. And you can use your compulsory super to pay a deposit and the mortgage. So it's a massive, massive sort of welfare funnel of just getting people a house cheap when they're young. And so for your average Singapore couple in their 20s who buy an HDB dwelling, it costs them $0 out of pocket, because their combined compulsory savings pays the deposit and the loan. And they typically pay it off in 10 or 15 years. And so what happens is you create a parallel market. So there's a mandatory occupation period for 5 years.
Yeah.
And then you can sell it to someone else. Another eligible first-time buyer who meets all the criteria, you can sell it to them at a negotiated price. That other person will choose, do I buy the new one, or do I buy this second-hand one, which is in a different neighbourhood at a different price? And as long as you can buy a second HDB as long as you sell your first one within 6 months. And so you create this parallel, cheap home ownership market that is anchored with this price floor, because the public developer will keep building new houses at that entry-level price, and anybody in that market has that opportunity to buy that cheap house. So you're not going to bid it up to the same as the private market, because if you qualify, you can go buy that $200,000 apartment anytime you want. You just have to wait a couple of years till it's built. And so, I've interviewed people in the HDB in Singapore, new tenants in Singapore, people who work in the housing sector who've moved to Australia, and they're puzzled that other countries don't copy this because they went from below 20% home ownership in the 1960s to 89% today.
Wow.
So it's completely essentially solved. There's essentially no homelessness because there's this large public organization that just builds and manages so many dwellings. They just essentially put you in a dwelling for, $60 a month or some token amount, and provide other welfare services to keep you off the street. But it's very, it's hands-on in some ways, but it's hands-off in others because when you buy a new dwelling, you can actually fit it out however you like. You can go raw and have no kitchen, only an external door, no internal doors. And you can go buy a private contractor to build you any kitchen, bathroom, tiling, doors, anything you like, right? And do it the way you like and resell it later and buy a bigger one after 5 years when you've got more kids or whatever the case may be. And so I think the reason I talk about this model is a few things, but the main issue in Australia is we saw a lot of first home buying recently, right? So it's very hard to say there's no first home buyers. The main issue really is this life cycle housing problem. So when you're in your 20s, you're paying rent, you're saving a deposit, and you're trying to start a family, and you're at your lowest income years of your life all at the same time.
Yeah.
Right? And then when you're in your 40s and 50s, your kids are growing up, right? You're in your highest income earning years, and housing's no issue back then. And so we've actually seen the age of first home buying in Australia go from 27 in 1980 to 39 today. And so it's really about giving young people their young adulthood back so that they're not essentially paying the rent, saving the deposit, all at the same time while they're being squeezed. So I pitch it as a very pro-family, pro-lifestyle. In many ways it's pro-market because, once you set up this parallel system, people can trade within it. And I think it, navigates many of the issues we have right now in Australia.
One of the problems, there's lots of problems, so I think, with our grant system. I think the main one is really just is not really there to help first home buyers. It's actually there to help the construction industry. Because the problem is, and this is what a lot of first home buyers don't realise, is that if they use grants, go and buy a brand new property, then where's the secondary market for that brand new property? So say they get divorced, say they something happens, they need to move. And I interviewed countless first home buyers who got caught in this way. And investors similarly, in the sense that the negative gearing is greatest for a brand new property. That property's 1 year old and gets sold, you have a lot less opportunity to negatively gear, right? So who's the secondary market for it? And so that's one of the reasons I discourage, there's a number of reasons, but it's one big reason why I discourage first home buyers from taking those grants if they dictate the type of property that you have to buy, because ultimately you're buying an asset, and if that asset has a high proportion, and there's loads of data to show that first home, the first resale of apartments in a Melbourne, Brisbane and Sydney, for instance, first resale is often at a loss, a very high proportion. So therefore, you're not really buying your first home. You might as well start renting. You're going to be better off financially if then take that free money from the government. So how does that differ, I guess, in a way from the Singaporean? Yeah. You say that there's like this parallel market, so you can trade within that market. Is that? I guess.
So essentially, they sort of get over the fact that there is a premium. Well, there's actually more of a premium on the second-hand dwellings there than the new ones. Usually because they're in more established neighbourhoods, and so it gives you a bit of a premium. I haven't even told you that in addition to all of this, there are income contingent cash grants if you buy brand new, and further cash grants if you buy within a kilometre of your parents. So it's about fostering this family, looking after its elderly parents as well. And so you can get up to $80,000 additional grant for buying new. Now, so let me give you a bit of a ballpark. So you might buy that new HDB dwelling for $300,000. The sort of next best alternative second-hand one might be $500,000 in the HDB market, and then a private condo in that sort of similar area might cost $1 million.
Wow.
So the other thing that I think the Singaporeans really like about the system is you do get a chance to make a bit of capital gain in that market, but it's all just scaled down compared to the private market by, less than half. And so, one of the issues you probably have to overcome here is people buying new, getting their subsidies, and then in 5 years selling and, making $150,000 or whatever the case may be. It's seen as a good thing. Yeah, it's seen as a good thing.
Yeah.
And, the less that premium, so to your point, Veronica, the less that it goes up, the secondhand market fetches a premium on these apartments, and it's probably the better in a way. It sort of discourages turnover and people trying to speculate in what's meant to be just a home ownership market for people to occupy their dwellings. Yeah.
I think as Nightingale, I'm not sure you know much about their model, the housing model, which is sort of I guess it's an innovative strategy. I mean, they buy land and they partner with architects that are willing to give their time at a much lower rate. They cut out marketing costs and commissions to people selling, and they've got a huge demand of people that would love one of their buildings. They're very architecturally nice buildings. They're green, sustainable. They cut out all the things that would make a building more expensive. They build really smart. And then they also give restrictions to the people buying them. So it's like a ballot system. You get lucky if you get one. You can't sell it if and you don't want to sell it because the building's all built around community. And I think you got to sell it within that at a fixed price. You can't make a lot of gains out of it, etc. And it's been very. It is, I guess, an innovative strategy there. I guess it just depends on how much can you actually release. If you've got 100,000 first home buyers or 200,000 first home buyers that would love this new government housing, how are they going to build all that? And maybe it's literally got to be a ballot system, and maybe they can supply 5,000 a year or 10,000 a year, but they're not going to be able to really saturate the demand where developers are still going to be able to be out there, selling to first home buyers. And maybe it has to be, key workers, I guess. If you're a nurse or you're an ambulance driver or, a teacher, and where they're the ones who hit the hardest. They've got to live around the city because of their work, and their salaries aren't able to compete with property prices. And so maybe that's a part of the solution as well.
Yeah. Okay. Well, let me just respond to a couple of those things. The Nightingale model it sounds a little bit like what is known as a community land trust, or somewhat similar, where you sort of buy in at the start to develop a somewhat intentional community, to cut out any development margins, and essentially, rather than design the building and then find the buyers for the building, you find the buyers and then design the building around them. And so you don't have to incur those selling costs or the risks, etc. Look, I've been involved with groups of people trying to do that in the past. It's very difficult, very difficult to coordinate, right? And I wish these guys all the best of luck as they refine the system, right? Because you've got to screen people, make sure they've got the money, there's no building, how do you get the money, and so on and so forth. There's lots of coordinating steps that developers do that you have to do in a slightly different order that no one's really ready for. So I would encourage and support all of that. I don't know what sort of policy change we can do to encourage sort of lenders to be more active in that sort of space, to manage risks of people getting in up front but then who have to withdraw before the building's complete, and so on and so forth. All those things I would love to iron out. If you do that, maybe you can get some scale with it, and that could be a great, additional choice in the housing market. I'm a big fan of more choices rather than fewer choices when it comes to housing, right? So I would love more community land trusts. I'd love more social housing. I'd love more alternatives, ways to access housing, and more secure ways. So I think that's great. In terms of the scale of, getting a public housing supplier, we build about 1.5% to 2% additional stock a year, so about 150 to 200,000 dwellings. Just remember, all the 10 million dwellings are already owned in the private market. So a lot of first home buyers, we worry about them, but a lot of them are just, from well-to-do families with plenty of assets and good jobs, and that's why they're buying a home, right? And so quite a few of them are still going to just buy in the private market because they've got 10 million houses to choose from. Well, whatever's up for sale, 50,000 or for whatever happens to be for sale, right? But they got the choice, and they get the exposure to that asset return by buying in the private market. So my sort of expectation would be, if you started to sort of Australian version of the Singapore model, and my proposal is called Housemate instead of the Housing Development Board, because I like the JobKeeper, JobSeeker, Housemate, Medicare, all those Aussie names for policies, right? I think what you'd end up doing is building around 30,000 a year. So about a third of first-time buyers you'd get. I guess the problem is the first transition period, because you've got so many people who haven't bought a home at many different ages all at the same time. In Singapore, they have lottery systems to regulate that. So you find a build-to-order development, you go, where we want to apply for a 3-bedroom, you get your finance approved, you go into the lottery for 3-bedroom, and if you say no a certain number of times, then you get penalised. You can't go in another lottery for a certain amount of time. So forces, it's a reasonably fair system to get people in. And I've proposed in my housemate proposal that you're going to have to use a few lotteries at first, or maybe, as you suggest, additional screening controls. So you might, take public servants, school teachers, nurses, and so on, in a particular city, and that's your qualifying pool as you ramp up the capacity to actually build things. And I'm agnostic about who builds it. I'm fine if Stockland comes to me and says, hey, we've got a few good sites here. Can we bargain up front for a bulk price for a housemate to buy everything, take away our risk, and we will keep our guys employed, pumping this out in the background at no risk to us, because you've already essentially agreed to buy the whole thing. And you can then go and allocate it to the nurses, doctors, whoever's the key worker in that city. So I'm agnostic about the actual getting houses in the system. There's actually currently a petition in the ACT to trial housemate in the ACT, and they have the advantage of being the major land developer, the territory government. And they have, again, the same issue with public sector salaries and, key workers like teachers and nurses and so on, outbidding, wealthy political families or whatever the case may be for housing. So, I think if you got a trial in a couple of key cities and towns, you can imagine, for example, the nurses union or the teachers union lobbying for it everywhere else, and it becoming a real, hey, everyone should be on board with this. So that's where I think you could go with this idea.
Do you need a benevolent dictator, though, to make these things happen?
No, look, I have a theory of political change. I'm sure you're aware I wrote a book about political favouritism called Game of Mates a few years ago. And I guess the way I see it is, we're all a little bit selfish, and we're all a little bit groupish. So we're benevolent to our groups. We're very selfless to our groups, but we're very pro-group. So we're happy to impose costs on others and support our own groups. And I think what happens when you get political change is there'll be a crisis where these existing dynamics temporarily break down, and there's a real opportunity for a group to reform around some issue. And that's what, if you look at national health services and things like that, the UK National Health Service was essentially, we can't let returned soldiers die on the street. There's a crisis, we have to do something. That's somewhat true of Australia's housing after the Second World War too. We've just trained up all the young men to shoot each other in a really organised way. Maybe we shouldn't let them be homeless and sick. Maybe we should do some stuff. And in Singapore, the way they got the system, there were many major fires in the slums. And so there were 20,000 homeless people overnight. And what do you do for your political credibility when that happens? Well, you have to be the strong man and come in and save the day. Then once those 20,000 people get a new dwelling, the next 20,000 will go, hey, what about me? If we're in the business now of giving people a place to live, let's stay in that business.
We have an opportunity in this country right now. You've got floods, Lismore, Brisbane. You've got your bushfire, there's down the south coast of New South Wales, you've got people that are still living in caravans, that we have an opportunity. We've had countless opportunities to do something like this.
Yeah, look, I mean, the catch right now is it's so difficult to get construction jobs done, right? Yeah. So not only have we had this sort of COVID home builder grant type stimulus. We've had a global building boom, so global materials shortages. Now we've just had all these floods. I don't know, if I wanted to renovate, how long would I wait, right? A long
Yeah.
time. So a
Yeah.
little bit like how the central bank operates countercyclically with its monetary policy, my expectation would be once you have a large public housing developer in the system, as one of many, housing developers out there, they would be more they'd be more, anti-cyclical. So when things start fall, they would start ramping up and accumulating sites and kicking things along. And I proposed that when COVID struck. I said, if you think the economy is going down, you should go and buy undeveloped sites that are approved from developers who don't want the risk on their balance sheet right now at a discount.
Yeah.
And you should employ all the builders who are lined up to just keep building them, but now you own them as a public housing supplier, and you got them at a great time at a discount, and you can smooth out the construction industry. Of course, that was pretty well ignored. But you could see, once that idea is demonstrated in practice, you can see it catching on.
Cameron, I mean, we just got a listener question yesterday, and then we're talking about the Falinski Report, and they mentioned that we didn't talk about migration, and I'd love, as a economist, your take. Because the reality is, if we keep importing talent, which we need as a society, and that's probably, I'm not trying to take your answer away, but if we keep allowing more and more people to move to our beautiful country, because there's only 25 million of us here, and there's 7 billion of them in the world. We're always going to have this problem. We should just cut our migration. What's your sort of economist belief around all that? And
Yeah, look, it's a very polarizing debate, the migration one. And I think there's a lot of political correct layers in the debate. People find it hard to say that we should actually have a limit to migration. I feel like I'm in a pretty middle ground view that, I think the optimal rate is about 100,000, 80 to 100,000, which is what we had essentially all through the 90s up until 2006. You've got to trade off the mixing of culture, the spreading of ideas and skills with the local labour market and the housing market. Though, in saying that, during the 2010s, 20-teens, we had pretty high migration, but we also had very high housing construction, especially in Sydney and Melbourne, especially apartments. And so you actually find that I think rents peaked around 2015 or 16 in apartments in Sydney and Melbourne. So, there might have been some bit of a temporary effect on housing, but I don't think it's very big. And I think a lot of the mistake people made in 2020 when COVID started was that they thought that migration was doing a lot of the job of keeping house prices up. And so if that collapsed, prices would come down. And my view was, but we've also been building a lot. Rents are relatively flat. I can't see how it's doing a lot now. And so, in fact, in May 2020, I did a podcast and predicted that prices in Australia would get more likely to go up 20% than down 20%. And of course, all of social media called me an idiot and wanted me to hand my degree in. And
we missed you in our full forecaster report. We should have given you a gold star.
I think it was just me and Chris Joy. I don't know if you know others who were at the time.
Yeah, we know Chris. Yeah.
Stuart Weems. He was one of the gold stars.
Yeah. So I think the impact of migration on housing is overblown. The impact of migration on entry level labour, is real. And reasonable, but in economics it's all about trade-offs. I don't want closed borders. I think it's been terrible the last 2 years, but I don't want 250,000 a year permanent migration either. At one stage it was something like 1 in 8 people under the age of 30 in Sydney was a foreign student in 2019. Right? It was pretty crazy. So you can imagine a lot of competition for entry-level jobs in that sort of circumstance. So. Anyway,
that's what you're saying.
The effect on, I think, housing was overblown, and we're in a world of trade-offs. I don't think closed borders or open borders is the right one, but probably a bit less than what we had before COVID is optimal.
Potentially, one of the reasons that the impact on, or the expected impact on housing is overblown is because migration would potentially have more of an impact on the brand new segment of the market. And you can see there's been, and not COVID notwithstanding, you can see over the last property boom, say in Sydney and Melbourne, 2013 to 17, you got some apartments in brand new complexes and areas, whole areas, where values have been falling, whereas property prices and median prices are rising. So this is not necessarily new, you know what I mean? So there, I guess it's a bit naive just to say, oh, well, God, if we're going to have no immigration, then prices are going to fall. It's showing a complete lack of understanding of really the segments of the market as well. And, this is something that I still find quite astounding, that you can have types of properties and individuals losing money when everything else is going up, and the same things happened in the boom last year.
Yeah, well, I mean, it's interesting. In inner city Sydney and Melbourne, I think apartment rents are basically where they were 10 years ago right now. So, that's great in my view.
So if you can't rent a house in Lismore, move to inner city Sydney or Melbourne.
Yeah, the regions are where the way I see what's happened in the regions is essentially people have taken their inner city incomes and moved to the regions and squeezed people out. I mean, it happens in gentrifying suburbs where all the hippies used to live, and the high incomes move in and squeeze them out. We've just sort of seen a different geographic pattern of that take place. But I like having lots of apartments in the city for people to choose from. Like it's, people I think misunderstand. I don't think planning's to blame for high prices, but I want more houses than fewer houses. I support having more dwellings to choose from, that's for sure.
So, Cameron, we do a segment called Property Dumbo. Have you got a story that we can learn from, a mistake that could be avoided, I guess? It doesn't have to be yourself. It could be just a story of somebody doing something.
Look, my head lives in policy land. I can tell you an interesting story about public housing, and, the New South Wales government planned to sell all this public housing, and they planned to raise, $400 million in 2014. They're like, this is going to fund our new public housing. And what's really interesting is the dumb move was actually to do that. What ended up happening is they delayed it. There were all these delays, and they didn't sell most of it till 2017, and they actually raised $700 million, but purely by accident, when they'd only intended to raise $400 million. So I think that's sort of pointing out that logic before, that owning real estate assets is a good thing, and when our governments panic and sell because they pretend they don't have money, they're often just giving the gains to the next person.
And did they actually build the public housing
with that money? Yeah. They're slowly using the revenue to build public housing. It's very slow, and I think what can you do about that in some ways? It's not a good
time.
Yeah.
Apart from housemates, so just one last question, if I may. What are you so sick of hearing in policy land, as you say? And what would you just like to say, get over it, let's just get on with it, and these are the things that you would recommend?
Well, the current thing that's been on my mind, there's probably a lot of those, but the current thing on my mind is this price to income ratio. Everyone's saying, price to income's high, therefore it's unaffordable.
Yeah.
I'm like, but you're basically just restating the yield of the asset in a different way. What you're saying is this is a relatively low yield asset, or that you're relying on capital gains. And does that mean property's unaffordable? Well, no. If interest rates are 2% or 8%, many different price to income ratios can be affordable. So I think So that's sort of the main one, misinterpreting an asset yield for a measure of how much it costs to occupy a house. I think if we could never use that metric again, and actually talk about sort of rent as the cost of occupation and the price as the price of the property asset, we'd go a long way to clarifying a lot of the debates that we have, where we confuse demand for occupying a house with demand for property assets in a portfolio, for example. That would be my one clarification.
I think it's really interesting because, I guess level one thinking, people go, property's worth $3 million. How can someone on $200,000 afford that, And the reality is a person not on $200,000 is affording that. And, you know what, they're putting all their eggs into that basket, and so they've only got a mortgage of 1.5 million. And, you know, it's very sort of surface level. And, you know, there's other pockets where maybe it's only 2 times income, you know, and etc. So, yeah, I agree. It really frustrates me when, and I think a lot of, you know, in financial advice space is they have that sort of level one thinking with the property market is it's a very low yielding product. How can it possibly go up? And they forget to add in the capital gains. They forget to add the lifestyle impact and, you know, and all these other elements to it. And so I do think you've, you know, a bit of a bugbear of mine is those sort of, you know, level one thinking around, you know, trying to simplify the property market into numbers rather than, you know, all these other elements into what causes a price of an asset to be worth something.
Yeah, no, but I think you're right. Like, the property market is not that difficult to understand, I think, if you take that one extra step. It's like, I think, you know, there's a lot of interest out there from developers, from financiers, from banks, for a lot of people, from developers. They all have an interest in misrepresenting what's going on, right? Well, you guys are able to talk openly and say, you know, new apartment's not an ideal investment. Developer will say, great investment, depreciation, return. And you're like, but actually, you got to compare the total return because this thing over here gets capital gains, right? And you got to understand the different dynamics of the suburb because you obviously, you know, you want to compare total returns. So, I totally agree on that. And I do find it amazing how many of these sort of myths that are sprinkled around the discussion just never seem to go away, no matter how many people are out there like you know, just trying to stick to the key points, right?
Yeah, the property bears have a few different points, and, you know, house to income ratio is one of those, etc. And you know, and they just keep on banging these points, and, you know, migration is going to cause property prices to crash, or, you know, and I sort of try to drag them up and try to have these conversations. That's what the podcast is about. But unfortunately, they get stuck in that camp, and they just can't get their brain to take that next step. So I think it's thank you so much for coming on today. I think it's been an amazing episode, and we'd definitely love to get you back in the future as well.
I'd love to chat again. Thanks for having me, Veronica. Thanks very much, Chris.
If you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or North Shore, my team and I can help you buy without regrets. Reach out via my website, gooddeeds.com.au.
If you're looking to buy your first home, thinking of upgrading into a new one, or purchasing an investment property anywhere in Australia, my team love to carefully guide you on this journey. And most importantly, get the finance right. Reach out via our website, wealthful.com.au.
Thanks for joining us. We'd love to see you again.
And remember, don't be a Dumbo.